Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Gianni Kovacevic. He is the founder of Lithium Bank and the founder of Faraday Copper. How are you doing today, Gianni?
Um, Very good, very good. It's getting a little colder here in Europe.
Yeah, it's even getting cold here where I'm at. It's starting to snow a little bit, and I see that you got your jacket all ready to go too.
Yeah, still haven't turned heat on at all, so it's a little bit cool, but doable. And I'm channeling my best Hugh Henry, that hedge fund guy down in St. Bart's. He always wears a hat and
Yeah,
usually
that's
some
right.
glasses, but so
Yeah, no, I wanted to really bring you on today to talk about the global economy and everything that's happening. There's so much news, even recent Federal Reserve meetings that are affecting precious metals, the prices. Where do you see gold and silver prices going within the next 3 to 6 months? And then what do you see after the recent Fed Powell meeting?
I'm not a gold bug, and I'm definitely not a gold analyst or technician. But I was just in Zurich, and I saw a presentation both from Ronnie Stufferly, who writes
Yes.
in Gold We Trust report. He's a very good friend of mine. I've known him for probably about 15 years. And then on the back of that, I saw a technical presentation from Florian Grumas, who
Yes.
does very good charting, and he really spelled it out and where we're going. And if I could just sort of summarize both their presentations. One, Ronnie's thing was called, or talk was called Showdown, because there's a convergence of everything that everyone's been listening and reading and talking about all these years is really coming to a head. And
Right.
there's the East versus West. There's the central bankers versus what can they still do, and then there's all this buying where the gold keeps transferring from the West to the East, India and China.
Hmm.
So something's got to give. And then technically speaking, talking about Florian Grimes, he walked us through the big cup and handle, the big pop out that happened back in 2011. Then there's been the drop, big consolidation, a couple different tries to go through resistance, this famous sort of 2000, just over $2,000.
Hmm.
And it seems like it's going to have, according to Florian Grumes here, it'll have that breakout, go to 2,300, 2,500, back down to 2,000, and then it'll finish off somewhere around 3,000, except for one caveat. It's interesting. This is the spot market, but when you look at the futures market, when the Israel Hamas war started on October 7th, gold on the futures market had this gap.
Right.
And he says almost always the gap gets closed. Now, it may not happen for a few years, but if the gold market retests, that right now, either it goes to 2000, or if it actually, it may close, and the gap is at 1830.
Right.
So we're going to see 1830 somewhere in the future. And I'm just going from the two presentations I've saw. As I said, I'm not a gold bug, nor am I a technician, but that's interesting. And I think there's a lot of evidence that will point to in the future a $3,000 gold price, but more in the near term, 2,500. Then it'll come back, but will it test 1830?
Yeah.
It should test this. It close that gap according to the futures market. So all things being equal, I think it should be as everyone's, drinking the Kool-Aid, especially with the name of your show, Wall Street Silver, and then what does silver do? Silver always lags. It comes
I
later, but
know.
it has even a stronger pulse. The
Yeah, that's
performance
right.
is even stronger when you're talking silver. And at least historically, that's what's happened. And probably there's no reason to think that otherwise for what could be an upcoming bull market in gold.
Yeah, and I was just talking to Florian last week, and we talked a lot about gold and silver, but we didn't talk about copper. What do you see in the copper market, Gianni, and how does that correlate with the world economy right at this very moment?
Well, you have the obvious, notion that copper has the PhD, the economy. If we have a hard landing or a sluggish economy or recession, I would say if there's such a thing as a recession, we're already in it. But who
Yeah.
knows? Once again, I'm not an economist, and that's a negative for copper.
Right.
You get economic, negativity, headwinds, China slowing down. Generally, and people just buy less copper. If you're a fabricator, you don't need to buy 90 days of supply, you buy maybe a month, and
Right.
slowly that compacts. It doesn't change the long-term narrative. And the demand for copper is going to be very strong for the next 15, 20 years. Okay, if you're a speculator talking about right now, who cares?
Right.
But it can fool us sometimes, because if it's a consensus trade, and that's the old thinking, that's the old orthodoxy. Oh, we got a recession. Oh, economy's not good. Copper's going to do terrible. Don't buy it, short it.
Right.
Maybe that trade's already factored in. Maybe it's priced into copper. Especially when you look at the value of US dollar, they're worth a lot less than they were 10 years ago and 20 years ago. So copper is currently trading at 370. It's sort of percolating up. What is that in real dollar terms from 10 years ago? It's like 250 copper, or maybe even less. Copper is not expensive. So is it priced in already? Barring a calamity or another thunderclap that happens, like something that, one of these once in 20-year, 30-year mega situations.
Right.
Right now, the world is going through a couple of the skirmishes, is the ones that everyone knows about. So, but I'm still a longer term or medium term sort of investor speculator, and I would say that the CAGR growth rate from copper is going to be strong. It's going to be very strong over the sort of the next 10, 15 years at parts. Right. So I don't care what it does the next 2 months, 4 months, 6 months, because I don't buy copper futures. I buy junior shares. They've been beaten up already. They're already low. Can they go lower? Fine. They can go lower. They're closer to the bottom than they are the top. So I would have the propensity, I already own them, but I own certain things that I've owned for a long time. I'm still up because I bought them really during the bear market in 2015, 2016 timing. Some of these things are still up 300-400%.
Right.
So is there some downside there? Maybe, but I have the, let's say I have the thick skin that I can wear it out. I can weather it out. And I'll probably buy a little bit more. I could trade out of some other positions and maybe buy my favorites for the longer run, because I see copper being eventually it's going to pulse through and you're going to see a new all-time high. I don't think that's an if question, that's a when question. And then it probably goes to some dollar inflation adjusted high, which would probably be $7-8 a pound, somewhere there.
Right.
And then it's gonna come right back down. But that will happen. And when that pulse happens, it'll be a mania.
So I just wanted to let everyone know about our new sponsor, Strategic Wealth Preservation. They are an international precious metals dealer, and they are a secured storage provider that have headquarters in the Cayman Islands. The company owns and operates a large Class 3 UL rated vault in the Grand Caymans, and they offer other strategic locations as part of its global storage network. They specialize in the acquisition, secure storage, and liquidation of precious metals for individuals, companies, trusts, and wealth management professionals on behalf of their clients. So if you guys want to check them out, the link is in the description below. Absolutely. And I've seen a lot of people online, instead of purchasing silver bars and silver gold, I see them even purchase copper bars. Do you purchase any type of physical copper, silver, or gold? I
have a little bit of, I have some artistic gold coins. I pay a little bit of premium on that. I have silver coins as well, but I pay premium. They're artistic. They're not really something that's going to change my life, but certainly I like, just to have. And if it's a really special friend on a really special occasion, I will gift something like that to that special person.
Nice. Yeah, that's
and
silver.
It means something to them,
No copper? What the heck? Where's the copper at?
People, but copper's too heavy. It's too bulky. You get way more leverage. You can buy copper for 1 penny a pound in the ground. I mean, you want to talk?
Yeah, way better to buy like that.
Of course, I'm talking about a high quality deposit that's got a measured and indicated resource, or even better, a reserve. Sometimes those are trading at 1 or 2 pennies a pound in the ground. Better way to go. Robert Friedland once joked that this is when copper was really low, that people should just buy a bunch of copper bricks, hide them in the garage, build a wall around it, and just let it sit there as insulation. And then you probably triple your money in the long run. And of course he was correct.
Wow, that's hilarious.
Practically did triple. So that could be one strategy, which is very heavy.
And it could happen again, right? Gianni, do you see a possibility of let's say you said it's a long-term thing for copper, and it's for leverage, you don't look at the next 3 months, but do you think it can triple again or double possibly?
You're talking about the copper price?
Yeah, copper prices.
Yeah. Well, I think a double here. It's 370. I already sort of basically suggested that as a speculation, we could see copper at $7-8 a pound. So that's something. It's not gonna, if it goes lower, it doesn't stay there, because a lot of people are losing money. It's not sustainable. You can't continue making a product and lose money doing it, especially something so widely used. But I will tell you the biggest news that's happened in commodities, practically for 2024, I will call it a top 3 news item. ExxonMobil on Monday announced that they're going to become one of the largest lithium producers. They're going to do it not with salars, not with hard rock mining. They're going to do it with DLE, direct lithium extraction, where they're going to use oil extraction technology meaning drilling wells. They're going to pump up, instead of oil, briny water, salty water, and through their chemical process, they're going to be giving you high purity lithium to go into a battery of the future.
Interesting.
This is a game changer. This is a game changer.
Why?
That is something everyone's got to follow, because the DLE stocks have done nothing. So there's two camps. One camp says, oh, they're going to crush the price of lithium. It's over, way too much lithium. And the other camp says, oh, this is a game changer. If you've got a deposit with that kind of endowment, you're going to make a fortune.
Right.
They're going to produce the first pound of lithium in 2027. So that has nothing to do with the price in the next 3-4 years. Second of all, their maximum production comes in 2030. But we need 40 or 50 of those types of projects to feed into the demand that's growing. Demand's going to grow by 400 to 500% between now and 2030. And it's going to grow 1,000%, 10x between now and the mid 2030s. Mm-hmm. Most of the lithium that's going to get produced is going to get taken up by industry. But that's not the takeaway here. The takeaway is, who is going to go after hard rock mining projects or salar type projects for lithium? DLE. Exxon, the world's largest oil and gas company, has already said it. And my company, Lithium Bank, we partnered with Schlumberger, the world's largest oil and gas service provider in Alberta, for our number 2 project, Park Place. So stock hasn't moved. That's amazing. We're already undervalued by a factor of 5 to our closest peer. So you got the catch up with the news that we're going to deliver in the next 3, 4, 5 months. Lots of news with Lithium Bank. And then as the analysts and global investors start to understand the DLE, and most people don't understand it, but now that it's on you can go to Exxon's homepage. It's now, at least it was yesterday, on the homepage of ExxonMobil is lithium. Mm-hmm. You know, this is a major story, and you can speculate there. You can speculate with a company like Lithium Bank, where, you know, there's not a lot of places to go. Right. So people that understand a share structure, understand something like this, you know, 18 months old, look at the chart. We've raised all our capital at much higher levels. This is a trade. This is a fantastic speculation. And if people want to speculate with people like me on this trend, with Exxon and with other companies that have already sort of are saying DLE is the way forward, I strongly suggest they start following it and at least get on the mailing list. Know when the news is coming.
Yeah, absolutely. We're going to be watching the market very closely, and it's such a pleasure to have you on, Gianni. We'd love to have you back. We're going to be watching the Federal Reserve closely as well, and we'll be watching the silver prices, copper prices, and all. And I'd love to have you back in the future.
Sure. Well, Fed's going to go this way for a while, sideways.
Yeah, we'll be watching.
Boring. It's going to be one hell of a boring movie for you. So
awesome. We'll talk to you soon, Gianni.